The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, it felt like on Friday that the grain and oilseed market trade, and livestock too for that matter, decided it wanted another 3-day holiday weekend. It was pretty quiet, kind of that malaise type of trade, as it feels like we're really gearing up and squaring up positions ahead of Tuesday's September WASDE report. Let's recap this week's trade and talk about things ahead of the report. We welcome in Jim Emter with Van On and Company to Market Talk here today. Jim, it's good to talk with you again. I hope you're doing well.
Jesse, enjoy the opportunity, and things are good up here. A little dry, but we've cooled off a little bit, and hunting season's right around the corner, so we're getting excited. So
I was going to say, hunting season's around the corner. Football season is here, and you mentioned to me too a little bit of harvest activity starting up because, as you mentioned, things have been dry, and I think that's given us an opportunity here for an early harvest, Jim.
Well, yeah, and I think you've pushed things here. There's no question about it. When you're 100 degrees here to start off late August into September, that's going to catch people's attention. And so you're pushing these crops. It's coming fast. You're going to hear edible bean harvest picking up. You're going to hear spring wheat wrapping up. And you've got corn just starting in areas where the drier pockets are. And, you know, when you start hearing some 165 to 190 type yields for Minnesota, that at least gets your attention that, hey, we need to be attentive here. There is yield drag potentially coming. We know that, but the demand sector has continued to be the problem, and I know people are tired of hearing that, but that's the reality of where we are and why the market's settling in here a bit more to ranges here within these markets.
Yeah, a lot of ranges. I think especially corn has just kind of had this couple of cent range is what it's felt like anyway. We keep hovering around this 480 mark, and feels like, you know, typically seasonally we tend to see harvest type lows in here. Big report in front of us here on Tuesday that I think is going to be interesting to watch. I think more folks are interested on the corn side than the soybeans, although soybeans got a pretty big story there to watch as well. But let's dissect corn a little bit here, Jim. I mean, boots on the ground numbers from USDA September report. Could we get something below a 170? I don't know if we can, and I think the market really would have to see something like that to make any major moves, Jim.
It would, and I think that's the expectation. So let's dissect that first. Boots on the ground. It's really the first that we're not relying on satellite imagery or survey results. So again, this is where you can get some little greater adjustments. You can catch the market a little bit off guard, but the market's leaning right now. The market expects lower yields. That's where we're foundationally coming in. You see a lot of 170 to 173, and I don't disagree. To get excitement to the bull side, you've got to be that sub 171, 170 to really get that momentum going. So what does that leave us with? Really a market right now that's holding the 475 support. If we were to break down below that area, 450 to 460, Jesse, is all I see for downside momentum right now based off the chart. So even if we go down, again, it could be a flash in the pan type sell-off, despite things being bearish, despite a 2 billion bushel carryout. I just think you're starting to run out of sellers. The farmer's very cash positioned right now. You've got, managed money that's short the market. Who's going to want to take that step to take you from 450 to 396? And I don't think there's a lot that are going to want to take on that base coming out of harvest, because I think the farmer's going to lock that corn up in the bin and really say, all right, let's see South American weather. Let's see foundation. I think that could allow basis levels to come in pretty quick, because we know we're a user-driven market here in the U.S. We've got ethanol that's going to try to bid up for some product. We've got cattle guys that are going to try to bid up for some product. We've got good cattle prices out there. Even hogs, recovering back in this mid-range is encouraging to see. So we're looking at this as, hey, interest rates are big. We've got 8 cents a month carry, and we're stopping at 26 cent carry. The market's already alarmed on this a little bit, Jesse, or else we'd be a 35, 40 cent carry already in corn if we were that detrimental and needing people to hold that much longer. So I think that's the foundation we've got to look to. As for upside potential, I do think there's a little more upside than what we've got for downside. If we can get going, you've got 511, 523, 534, and 551 as your key price counts. And those are all key retracement counts. And that 550 might sound like a lot right now, but if you can get a little dryness in Brazil and Argentina, and you've got a farmer that's holding on to that crop here in the month of December and not wanting to move it because he doesn't need any more income, then we're left with possibly catching the market a bit short, catching that flash in the pan rally, and getting a little more out of that top side than maybe what people envision right now.
Love that perspective. Good thoughts, both upward and downward in this corn market, and it's going to be interesting to see. I've heard a lot of the same you have, though. A lot of farmers sounding like they're gonna store corn, they're gonna sell beans off the combine. That seems to be the prevailing thought here, Jim.
Well, and I think that's what leaves us with a Sunday night to Monday trade here this last week of where people are caught off guard. I mean, we were so dry. We see a 5% decline in good to excellent rating, but yet we can't follow through because every time we get near that magical $14 mark, what's a farmer doing? He's saying, I'm going to hold corn because prices stink. Beans are up near my above break evens. I'm making money on it. So again, that's the product. And again, it sounds like a resounding record because I think any base analyst you're going to hear from is going to bring that foundation right now because that's what makes sense on the charts. Now, when we come and look at Tuesday, could USDA shift things a little bit? I think a lot of people were a little bit caught off guard as to how many acres they put into corn and took out of beans in that June report. We went back the last couple of years and we've seen shifts the last 2 years in the September report for acreage. So I think that's maybe a wild card here as you've got that coming up. Then you've got the stocks report here just a few weeks down the road, and then we're going to hit it again with another October report. So the reports come quickly here, and so you've got to stay on your toes. And I'm afraid a lot of people are getting lulled to sleep. In the bean market, we could have a bigger market down the road. There is no question we're a lot tighter there. We've got great domestic crush. I know it took a $13 hit today. I mean, the crush really took it on the chin when you look at it. But foundationally, I think we've got to look to beans as that bigger bull catalyst if you get the story. But that's a big if word there. And then the price counts, if we get going, are 1440, 1502, and upwards of 1654 to the top side. And I don't rule out any of those, but to get those, you've got to have a problem in South America, and you've got to see good demand come for beans. I was very impressed today to see with the good export sales today. Yeah. We're only 3% behind now on export sales pace for 2023, 2024 soybeans. So we are closing that gap, and we'll see if China continues to come to the table for those beans.
I didn't realize how closely we're on that, 3% behind. I mean, that to think about that, yeah, we've seen 7 of the last 9 days Chinese soybean sales here.
Yep.
But still, I mean, that's surprising to think that we are that close considering just how poor demand has been overall. And I know we just wrapped up the 22-23 marketing year, and now we're into the 23-24, but demand's just been real sluggish, Jim.
It has, so it has been sluggish. There's no question USDA has to reduce us to get us to that number. So I think we got to keep a couple things in mind. It's not like this is a number they've stuck with for months. We've been decreasing that export demand number to really get to this point, and we've seen better sales as of late. So that's encouraging. Now with the dollar index nearing $1.05 again, that gets you to pause for concern of how long is this going to stick around, and if Brazil has a good crop, can we fade off quickly? But the biggest point I want to make on citing that 3% is we've been pretty adamant that every time USDA comes to the bean market to make a yield cut, they're going to offset it with export demand. Jesse, we may have to pause here for a minute just to make sure China doesn't have a bigger appetite here before we start making the assumptions that USDA is going to continue to cut export demand if they cut yield, because that's how we've been able to keep things in check and not get too bullish. If they leave export demand alone now for the next 3 reports and cut bean yields, that's where carryout can get a little bit more uncomfortable for the market, at least if South America starts to have some issues as we work ahead.
Jim, corn and beans 24, Dees 24, Nove 24. Anyone getting real aggressive with some forward sales in the 24 crop yet here, Jim?
Yeah, Jesse, anytime we make recommendations, we got to be careful, but here's what we're going to say. We believe that getting a start to your 2024 marketing with beans over $13, corn market as it nears that 530 area is a very good consideration when you look at the lower inputs and the foundation. We hear a lot of producers coming in here and getting excited about the lower inputs and booking those, but if you don't come and match up some marketing along the way there, you are adding to your risk of decision process. What I mean by that is if all of a sudden we're 490 corn coming into February crop insurance price and we're 12.50 to 12 and a quarter beans, you just missed out on some real big opportunity there on the margins you're trying to make decisions off of right now. So I think it needs to be. We're encouraging producers to kind of look into that 20 to 30% arena. As for how we're doing it, I can't get into those details, but I think it's extremely important, Jesse. Yes.
No, a lot of things to consider there at least, and great perspective, of course. We do appreciate that. Jim Emter, Van On and Company, our guest today here on Market Talk. Let's talk wheat a little bit, Jim. You mentioned spring wheat harvest is kind of ongoing there in the Northern Plains, and really just looking at the wheat markets overall, whether it's Chicago, KC, Minneapolis wheat, obviously U.S. wheat's still pricey compared to cheap Russian wheat, et cetera, but do you look at this wheat market as a whole? Or have we maybe found a bottom? What are the charts telling you right now?
Well, let's come to charts and seasonalities. Let's tie those two together because I think that's important right now for wheat. There is no question we're coming into the seasonal time frame here really over the next week. So a timely conversation for wheat because seasonally, this is when we should be bottoming. We should see the bottom in Chicago and KC first. We should see a very quick bottom after that with the spring wheat. And as quickly as we push these markets forward here, I think we're going to be quicker to see bottoms in all three of these corn, beans, and wheat market. But when we look at that seasonality alone, that gets you encouraged. When we look at the technicals, I actually see some positive divergence on the charts. Talking Chicago wheat, I'm starting to see where we got lower prices here last week with higher momentum on RSI. And that's encouraging at least a first sign that, hey, we could be bottoming here. The component, though, is getting a story. You saw us try to get through 750 on KC wheat this week and then immediately drop back down into the 730s. I mean, it was like that we went from 754 down to that 730 area. And that just showed you we couldn't, when we tried to go up and get those stops, it just didn't. They hammered it and down we go. I think we're in the process of trying to find a bottom area. I think we can rally from here to October 15th, but a lot like corn, I'm afraid the wheat market is stuck in retracement counts. The only market that I see having the potentials to extend into new Fibonacci extension counts is really the soybean market. So if we live into that process, again, we can look at a 38, 50, 62 type percent retracement for the Chicago and KC wheat between now and October 15th. But I don't know that I would marry it if we get up to those levels and assume we're doing something bigger than that until we either have issues in Russia, Ukraine that direct more export demand out of the U.S., or unless we see continued dryness out of Australia and Argentina to at least show that next phase of Southern Hemisphere production having a problem. As of right now, there's just not enough new problems with the Northern Hemisphere and harvest season to just go and expect something dynamically huge unless something changes on that Russia-Ukraine front.
Yeah, and I'll throw in the India rice ban there as well. That was a hot headline here. Just it felt like 2 weeks ago, and then there's all this talk we're going to have to have more wheat going to India, and then now it just feels like that kind of faded to the background. Same thing with this Russia-Ukraine situation. We know that the war is ongoing, but all of this is just kind of swimming in the background here, and it's not really impacting this wheat trade a whole heck of a lot, Jim.
Well, it's got to turn into something, Jesse. We continue to talk big markets. Rallies are driven off the fear of the unknown or running out of product. Okay, there is no fear of an unknown right now that's immediately impacting us to run out of product. We're not at risk of running out of corn. We're not at risk of running out of beans under the circumstances we have right now. And that's when we get more dynamic rallies, is if those occur. So you got to begin to look around and say, all right, behind door number 1, door number 2, door number 3, what can open up to get those more dynamic runs? And that's where we say, hey, right now, the market's not seeing those. And that's why you see a lack of rally structure. We are lulling the market to sleep a little bit. So if something does come up, the reactions can be a little more violent. And that's why I try to, assume that, hey, corn, if we get the right story, can run 50 cents. Wheat can run a buck if we get the right story. But even at that, those are limiting factors right now on the technical chart. That's what we've got to lean on right now until we have something new fundamentally that can give us a bigger reason to go beyond that.
Jim, talk to me about livestock here a little bit. Cattle and hogs on Friday. It was a fairly quiet day, maybe a little more pressure in front month hogs than in the cattle trade. But I'll start with cattle first. Finally seeing some cash activity develop Friday afternoon. Really kind of looked about $1 higher, maybe $2 higher. I just feel like overall this cattle market, it's been caught in a range. We got through Labor Day. Grilling season's over. So, I mean, what happens in this cattle market right now? What's your take, Jim?
So the best perspective that we've talked amongst the staff, Christy and I have sat down and talked about this, our whole team, Ross, Steve, those are our cattle gurus within the office, and you've had some exposure to Ross now.
Yeah.
We've really talked about this and laid this out and said, what's going on here? Because again, you've been into a seasonal time frame for the last 30 days where if we're going to break down, you've got all the right setups. The Packers were trying to back away. You've got a seasonal downturn in the market, and you had some technical start of where this thing could break down, and it didn't do anything with it. So really for the last 2 months, Jesse, all we've been doing is coiling this cattle market. Coiling and coiling near the upper end of the range. What you've done in that meantime is you've allowed the ability for these charts to get current. You've allowed extensions to get a little bigger to the top side. What we mean by that is if we're tracking standard deviation channels and different upside, counts that allow us to have perspective, we're no longer overbought in the cattle market. We might be off of a cash component from opinions of fundamentalists, but on the charts, we've got upside momentum based off the 7 principles we use to use technical analysis. So with that, all of a sudden, 192 looks a far more in the picture for December than what it did here 2 months ago when we were peaking out this cattle market. So we're a little concerned that, and excited in the same breath, that what we're doing is during the seasonal, when we tend to drop, we went sideways. And you're potentially getting ready to try to put on that next leg. But as you're trying to do that, from what I've heard for Packers, is they're having a little more success at steady money to lower values on the private sales or purchases, I should say. And what you're seeing off that secondary foundation is, are they going to have the numbers as we work ahead? We know October, November, we tend to see better numbers come in. And if they can stay current and exports start to slump, that's where they may see that reduction. So this is a very edgy market. We are on point right now. If we can get above this, really 187, 188 area with some power, I think you add $5 to $6 to the top side very quickly. If we come and test the downside and break down below this VPOC, I think you got $5 to $8 down. So I think the more dynamic move is about to happen in the feeder cattle, live cattle markets. I'm a little bit stumped as to which direction. So we're going to be more reactionary when it happens, Jesse.
Yeah. Hogs, about the best thing I can say about hogs is so goes the cutout, so goes the futures a day later. See what it seems like here, Jim. I know cutouts were down Thursday. Here's futures down on Friday, but yet cutouts are back up on Friday. So I guess my prevailing thinking is, well, futures will probably rebound on Monday.
Because of the foundation. Sometimes you got to find those trend in choppy markets. Exports were, kind of missed the mark here today. And for a lot of this to maintain, we've got to continue to see that foundation. But, we're very current. Weights are current. I mean, this is a hog market that if it had a reason to go with better demand, if we had foundation technically, this thing would go. But we're just kind of stuck here. And to make that next trade, we got to get over the 200-day moving average. And that's not going to be an easy task for hogs, just as I look to the technical charts. So choppy near the mid-range to recent high is best we can do right now. And again, as we work ahead, we just got to watch some of those economic setups here, because I feel like even on the days you're talking here, Jesse, we've seen some cattle hog trading pickup, meaning spreading between the two markets. We're seeing those markets work in opposite tandems on days where you see hogs up and cattle down and then reverse. So now that cattle have a little more momentum, it seems like that hog market slowed a little bit. So even the spec trade having an influence on this market, in my opinion, just because everybody's longing for that next story and we failed to get it here to this point.
Good thoughts. You mentioned the dollar earlier, and I want to use this maybe as our last point here. I know the dollar's been higher. This crude oil market's been back up around 90 here the last couple of weeks with some of the production cuts and more. And it feels like some of that outside market stuff has been a headwind here this week, especially in the grains. I mean, what's your take on that, Jim?
Well, let's just kind of remember, as the crude oil, heating oil prices have picked up in years past, that usually have pulled the grain markets higher. I mean, you can't just look at corn as a food grade product anymore. It is an energy source. So as we see those products pick up, it just gets you to scratch your head a little bit more. And by no means am I bullish off that foundation. It just means, okay, I got to come to understand that these price counts that a lot of people don't think can happen because everybody's bearish right now, could come into play. So I think that does impact the grains directly. And, we've got an old saying here in the office: when you start seeing everybody on one side of the ship, bearish corn, bullish beans, these type things, you've got to start looking to the other side, because usually there's a current that will move that ship to the other side. And so I look at this current right now going on in the fuel sector and saying, okay, that's going to impact probably the corn market first and foremost, then beans behind it. We'll watch the crush margins off that foundation. But when you've got OPEC making cuts, and the U.S. not stepping up to a degree to fulfill those cuts, the only logical thing that can happen when you've got minimal reserves is the price is going to go higher. And that's exactly the foundation that we're into right now. And, you go look at every analyst right now that's tied to the crude oil market, and the hot topic is we're going over 100. Okay, that's the tone, Jesse, right now. And so now you're getting everybody leaning one way. That's going to drive this market to a price point. We don't know if it'll be 100 or not, but that's the momentum you're seeing in this market of saying, wow, we're high 80s. If we're going to 100, there's margin there. People are going to try to get in. And this is when it gets a little more dicey in the energy market now, because you're starting to get a lot of these analysts, the big ones, that are saying we're going to 100, possibly 107 as upside counts. And this is the momentum. So be careful, be attentive. But typically we'll peak this thing around those first 2 weeks of October and then seasonally slide into December. And that's when you want to get after your next year's fuel needs from our vantage point. As for the dollar index, we cannot ignore it. The 105 has a big impact, in my opinion, on Brazil looking very attractive. And here's why this is important. If we've got a strong dollar and a weak Brazilian real, and Brazilian farmers are selling in US dollars and then converting it to the real, they are getting a bigger flat price for their beans and corn to some degree, but beans first, than the rest of the world is getting. So that conversion of the dollar to Brazilian real is giving them a huge lift in their bean price. And that should make the bean market a little bit attentive, even though we've talked about some of those upper price counts and maybe having limitations on a break of 1330. We've got to be really attentive to this conversion, because if the bean crop gets in well and is growing well, the aggressive selling that we could see in beans later could be rather big.
Jim, great stuff. If folks want to reach out to you and the team there at Van On and Company to get some advice, how can they get a hold of you, Jim?
Yeah, give us a call, 800-648-5494. Another great way, check us out on the web, www.vanonco.com.
Jim Emter with Van On and Company. Thanks for joining me this week on Market Talk. We'll talk to you again soon.
Thanks, Jesse. Take care.
That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.